Thank you very much for finding me online, asking a question about what income do you need and to provide for a home purchase or a home refinance. If you haven't listened, this is a three-part series. This is number 2 of the series. We're talking about credit, income, and asset for traditional financing, which is Fannie Mae, Freddie Mac, that's conventional, USDA, FHA, and VA. So this is not a subprime, what I'm talking about. It's all traditional, no out-of-the-box stuff, no bank statements. This is all going to be traditional income that you're going to need to qualify for the traditional standard FHA, VA, conventional, and USDA home loan programs, whether you're purchasing or refinance. If you haven't listened to part 1 or part 3 yet, go ahead and link below. Click on those. Part 1 is going to be the credit, and part 3 is the assets. Thank you very much again for finding me. Income. What are you going to need for income? Also, I have a good video. I'll have the link below that you can look at. Schedule C and E earners. That's sole proprietor for Schedule C. If you're a dog walker, you work from your house and you do some kind of online marketing for somebody and they pay you a check or cash, that can be your Schedule C. That is sole proprietor. So I got a good video about that below. But traditional income is anything you verify that you've claimed on your taxes, or you don't make enough to claim on your taxes, but it's something like a pension, a 401k, a settlement that you're going to get for 3+ years or more. We'll go into that. Social Security, you'll get your Social Security award letter every year that we're going to need. So any income that you get that you want to utilize, we must verify that you get it. When your Social Security, you get the award letter, we'll need the bank statement showing that you received that deposit. Or in some states, you claim that as income, so we'll get the 1040s. So we need to verify anything that you are going to claim as income. We must verify it through a paper trail of some sort. This can't be, well, I get this, can you call somebody? No. You got to document it. It's got to be verifiable. So a W-2 wage earner, that's somebody that gets a pay stub. We go off the gross income, not the net. The gross is what you receive before taxes. So we need pay stubs to verify that. We need to get your W-2s to show that you have claimed that income and is consistent. Everything today must be verified. Those are easy to verify because you've got a W-2 wage earner job. You get that. You claim it on your taxes. You provide that W-2 and a pay stub. Easy. Then you got your sole proprietors. Individuals that are Schedule C earners. Those are the dog walkers. Those are the ones that you file on line 1, and you got a net line 31. So you can deduct stuff. Real estate agents or sole proprietors. Anybody that gets a 1099, they don't get a pay stub. Pay stub with taxes taken out of it. That you need to claim on your Schedule C, which you're a sole proprietor. Schedule E. Those are individuals that have a company. They file LLCs. They do incorporate a corporation. They have the K-1s. So we need to get those filings, your business filings, as well as if you pay yourself, we need your W-2s and your pay stub. We need to get those documentations, which are your federal returns. We do not need your state filings on your returns. We need federal 1040s. Each states are different what they call it, but the federal tax returns are the 1040s. So we're going to need those all pages. No state returns, we don't need those. And if you get Social Security award letter, we've gone into that. But if you get an alimony or you get child support, you get oil rights, you get it that you loan somebody a note and you're getting money every single month from that note, those need to go for more than 3 years. If child support, if your child is 16 years of age and they're a junior in high school and the divorce decree or court-ordered child support ends within a 36-month period of the funding date, we cannot use that income. So 3 years, anything that's a fixed income that's going to eventually go away, not upon death, but upon an agreement, it has to go for 36 months or more. If it does not go for 36 months or more, we cannot use that income. So that's that rule on child support and alimony. And if you get oil rights or you get mineral rights or you get alimony or you get a note that you've lent money and it's on a property, that can be claimed. There's a lot of income out there that people get from various sources. You got to claim it on your taxes. Like I said, some Social Security, some states you don't have to claim it, and that's all you get, and you don't make enough, that's fine. And we'll get your Social Security award letter along with your bank statements to show that there's a direct deposit of your Social Security award letter. So income is sporadic on how people get it. If you're not the plain W-2 wage earner and you get other auxiliary income, yes, we can use it. But how do you claim it? If you rent a room out, you're not claiming that, so we cannot use that. If you babysit, if you car wash, if you don't claim any of that stuff as a Schedule C, we cannot use that. Still sell stuff on eBay. Uber drivers, Lyft drivers, we can verify that. We've done it. Income is evolving in our business because it's not the traditional W-2, Schedule C, Schedule E wage earner. There's a lot of ways that you can earn money today as long as you claim it. We don't do traditional financing, does not do bank statements or verification of employment only called a VOE. We have to do that still in our business, but we just solely do not rely on that verification of employment. We don't rely on deposits when it comes into bank statements. We rely on traditional financing. We have to rely on what you claim, and we need to verify all that. Bottom line, I do have a video below on your Schedule C and Schedule E earners. We won't go too into depth because it's complicated to go over a podcast, but we do not use your gross income. That is not what we go off, unfortunately, with Schedule C and Schedule E earners. We do go off that with a W-2 earner. We use the gross income. When the Schedule E and a Schedule C earner, we use net income. So we go off of that. So the gross you can make $1 million, but you're only netting $100,000 on Schedule C or Schedule E. We use the net. If you have rental property, that's a Schedule E. We don't go off the rental contract. We go off what you've claimed, what you've deducted, what you depreciated off that Schedule E, and that's how we derive at that positive or negative number. If you just bought the property, we go out first year, like when I'm doing this podcast in 2022, you bought a property, let's say in March, and we're doing a loan for you now, we will go off the rental contract because Ann will get the final settlement statement to show that you bought it this year because you have yet to claim it on your taxes, so that we can go off your rental contract. But if you had a full year of owning that property and you claimed it on your taxes on your Schedule E as real estate income, we're going to use what's on that. I know it's complicated for some. I've got people say, well, I made this much money. We get their supporting documentation in, and it's not that way because the way we have to report and claim and verify and use traditional income to prove that what you make. So we can use a lot of it. Just talk to a licensed mortgage professional such as myself to go through your income on how you derive it at so we can utilize it. If we can utilize it, let's do it. Okay? If you haven't listened to now this is to get a purchase or a refinance. Okay, we need verifiable income on every traditional loan. This is part 2 of a 3-part series. First one is in credit. If you haven't listened to that podcast, the link is below. If you haven't listened to assets, which is your bank, which is your cash, listen to that video below. The link is below. That's part 3 on how to get yourself set up for traditional financing now for a refinance or a home purchase. Your 3 main criteria: credit, income, and assets. And those are, we'll go into assets, listen to that video. And also below is a link for the income that I did a while back on Schedule C and Schedule E that you can click on and watch that to see how we go through Schedule E and Schedule C earners. W-2 earners, that's straightforward. We just go off your gross. We look at your pay stub to see if there's any deductions from the pay stub, such as a court-ordered garnishment, wage garnishment, child support, or alimony that comes off the pay stub. So that's why we also need the pay stub too. And we need at least 1 month. So if you get paid twice a month, we need 2. If you get paid every other week, we need 3. If you get paid every week, we need 5 pay stubs. just to submit them in so we can look at what's going on with the pay, if there's any bonus, commission, and overtime that we can utilize. And that's always changed, the bonus, commission, and overtime. If you started a W-2 hourly wage job and then you went into an hourly wage job plus bonus, commission, or overtime, if you don't have a 2-year history of that, we can't utilize that. There must be a previous 2 history, consecutive previous 2 history of receiving commission, bonus, and overtime. So if you just started getting overtime, we got to use your base salary. Remember to like, share, give me a thumbs up on this video if you found it informative. My name is Nathan Rufty. Give me a call, 909-503-5600. If you're looking for a home loan, call me. Love to connect with you and talk to you about it. Have a good day.